Hey guys, how's it going? Thanks for joining us again here at the Simple Health Coach, where we're all about health simplified. If you're watching this video, then that means you are taking a look at our financial health video series. This one specifically, we are talking about investing for beginners. In this course, we have a 5-part series starting out with Investing 101, where we will teach you about the stock market and the basics of investing. From there, we will show you how to access the stock market by opening up your own brokerage account. The third part of the series, we will show you super simple investing strategies that will make your money work for you with little to no work. In the fourth part of the series, we will go over Retirement Accounts 101, from a 401k to an IRA. And in the fifth and final part, we will show you how to become a millionaire. Now, of course, we can't guarantee that you're going to become a millionaire. However, if you take the advice from this simple series, the chances of it happening will go up significantly. So let's get started. And we want to start off with this quote by Robert G. Allen. How many millionaires do you know who have become wealthy by investing in savings accounts? I rest my case. The reason that we share this quote is because if you're watching this video, you likely have money in your savings account or you're building your savings account and you're trying to figure out where's the best place to put your money. Well, the beauty of investing in the stock market is it has your money grow and work for you. So if that's your case, then keep on watching. So let's start off with a very simple question. What is the stock market? A good way to understand it is as the Amazon marketplace of business ownership. So in other words, it's a market that you can go to and buy stock to become a partial owner of a company. Let's take a closer look. Here at the stock market, you can enter and you can buy what is called a stock, which is also partial ownership of companies like Coca-Cola, Uber, and Amazon, and many, many others. Here we will show you how to purchase stock in a very simplified version. So you come along and you decided that you want to go and buy stock. So what you do, you go to the stock market. And from there, you decide that you really like Coca-Cola. The company has performed well over the years, you love its taste, and you believe that it's going to grow over time. So what do you decide to do? You decide to buy one stock, and let's say, for example, for $10. So after buying that stock, that means that you now have partial ownership in a company, which is really exciting because Coca-Cola is one of the biggest companies in the world, and now you are part owner in that company. Let's talk about the rewards of owning stocks. As the business grows, so does the value of your stock. You originally bought that stock for $10 and you kept it over time. And as it grew into a new value of $80. That means that you have profited $70 with little to no work. And that means you are a happy camper. Now, with rewards, there are also risks of owning stocks that you really need to understand. So if the company that you bought fails or underperforms, then your stock value goes down. And so let's take a look. So you originally bought the stock for $10. Now that company did poorly, whether it was because of a poor market, poor leadership, or product malfunction. That value has now gone down, which means that you lost $8 in this example. And of course, you are not going to be happy if this happens. Now the good news is that there are ways to reduce this risk. And one of the most common ways is through something called a mutual fund. Now, a mutual fund is actually a group of companies and a group of stocks. So in this example, we can see this mutual fund owns Coca-Cola, SpaceX, Simple Health Coach, Google, Uber, and Pepsi. The good news is that, say, for example, Coca-Cola ends up going out of business, which can lead to some concern. And you will see that there will be a small dip in that price. Now, the good news is that Pepsi, Uber, Google, Simple Health Coach, and SpaceX are still alive and performing really well. And so as they continue to grow, so will the value of your stock over time, therefore reducing your risk. So let's talk about an overview of Investing 101. The stock market is a place where you can buy ownership of a company in the form of stock. The rewards of owning stock are that the value of your stock grows as the company grows. The risks of owning stock is that if that company fails or underperforms, then the value of your stock goes down, which means you lose money. You can reduce the risks by purchasing a mutual fund. Now remember, a mutual fund is a group of stocks. So if one of those companies fails, the other companies in that mutual fund will hopefully pick up the slack and help you make money over a long period of time. So now you have a good understanding of the basics of the stock market and what it means to buy a stock and a mutual fund. So what's next? We are going to show you how to get free access to the stock market in order to start investing. And that is going to come in the form of a brokerage account. So if you're ready to get started, go ahead and move to the next lesson.